The season of delistings, there have been plenty. HSBC Invest Direct, of course, got closed up earlier today, but there are many more in the running. Jagannatham Thununkuntla joins in to talk about that. He tracks many of these delisting stories. Jagannatham, morning. Let's start off with HSBC Invest Direct. Would you say that's the fair price that's been struck at 400 to a share?
Good morning, Mitali. In case of HSBC, it was quite a stellar running. For example, when the reverse book building process started, it was just in the range of 297. Finally, the price that was determined in the reverse book building is 400. So that is good 100 rupees gain on this HSBC stock. Even now, I think even yesterday it was around 388, 387. So there was about 2-3% of definite possibility of gain in case of HSBC as well. So more than the fair price, it's more of a question of understanding the nature of shareholders and their intensity, because 93% was already with the promoters, only 7% is with the outside shareholders. So naturally promoter wants to buy out them at any cost. So those shareholders are in a position of giving the shots. Finally 400 was a very, very good price for the shareholders to make.
Is there still any arbitrage that can be played on that one though, Jagannath?
Yeah, definitely there is a arbitrage opportunity. If you closely observe, as I was just mentioning, the day when the reverse book building started, it was 297. It closed at 400. Even on the day when the reverse book building closed, it was 367. So between 367 and 400, there is a good 7-8% arbitrage opportunity was there. So in fact, if shareholders and if the investors carefully observe these will be good investment trades without much risk, but with healthy returns. Whatever may happen in Greece, whatever may happen with Goldman Sachs, these are good arbitrage opportunities. Even in case of Suvasis Diamonds, that is yesterday the reverse book building which got closed, maximum bids came at 320 rupees. And the price yesterday closed in the range of 273. So there was a good 50 rupees opportunity there, that is in the range of 20% gain. Only one risk in the case of delisting that the investor should know is that at the end of the reverse book building procedure, promoter has a right to say that he is not comfortable with the price determined in the reverse book building. He doesn't want to go ahead with the delisting. That is the only risk. If somebody is ready to take that risk, it's a definite arbitrage opportunity.
So in that case, how would you play Suvasis? Because the base price over there is far lower. I mean, that's 222 a share.
222, but that doesn't matter, Mitali, because what matters is finally what is the price that is determined in the reverse book building. What is the price? Is the price at which maximum bids come. In case of Suvasis, 56% of the bids came at 320 rupees, and current price is in the range of 270 to 80. So that is definitely there is a 30-40 rupees opportunity to make. Only thing is Suvasis is thinly traded share, so that way it's slightly difficult to pick a large chunk of shares. But otherwise there is a 40 rupee opportunity. And not only at the time of reverse book building, even after the completion of reverse book building, shareholders have a time of 1 year, before which they can send it to the company and the promoter to get their money back.
And finally, Goodyear India.
Goodyear India is opening today, and in fact, after looking at the HSBC and Suvasis, the kind of rally that was seen in these two issues around delisting, even the Goodyear has seen a very, very strong rally even before their reverse book building started, because 270 was their floor price, and it already rallied to 322, and today it is opening. Investors can carefully observe how the book is getting built and at what price it is coming, and if there is an arbitrage opportunity, definitely they can take advantage, because Goodyear also is being is a renowned name. Definitely they will not be going back from the reverse book building. They want to go ahead as far as possible in terms of the delisting. Closely observe the book, how it is getting built and at what price it is getting built. There may be definite arbitrage opportunity. In HSBC and Suvasis, there were very, very good opportunities, and then even Goodyear can give some such opportunity.
Is there sufficient liquidity to play the arb on these stocks though, Jagannatham? I mean, as you were saying, for Suvasis, the holding is rather concentrated.
Yeah, Suvasis was slightly challenging, Mitali. In case of HSBC, yes, there was, and in case of Goodyear also there is, because the promoters were having only 74%, and 26% is very well outside. Even in 26%, only 3% is held by two large investors. One is by one FII, one is by one local broker. Except that 3%, remaining 23% is very much with the public. So there is whether it is there or not today volume, I'm sure as the book is getting built, the opportunity of the chances of volume getting built up is higher. So good year can give good opportunity to make some arbitrage opportunity.
Thanks, Jagannatham, for joining in today. That's a couple of interesting delisting plays and the arbitrage that you can play on them. On HSBC, remember, it was extremely active. Let's take a break. When we come